Hi, Tim. It's great to see you again. I'm in Costa Rica, enjoying my Costa Rican coffee as I do every morning. And I'd like you to join me virtually to discuss interesting topics for our IANUA community.
Pleasure meeting you, Sergio, and great to see you again, indeed.
Where are you at the moment?
At the moment, I sit in our Düsseldorf office in Germany. As you know, HPE Growth is headquartered in Amsterdam, but the travel plans didn't allow to be there. So today in our German office.
Okay, so I imagine with the weather a bit freeze compared to here.
Yeah, we have the typical famous November drizzle that you would have. And as you know already, it's afternoon time, getting dark here already. Not even pretending to have my morning coffee, but rather my afternoon tea time. Yeah.
Yes, great. Have you been in Costa Rica, or which places in Latam you have visited?
Oh, I didn't manage yet to come by to Costa Rica, but definitely will put that on my journey, and here would invite myself to your place when I'm coming over. No, I have been just kidding. I have been to some places in Latin America, particularly say Brazil and Uruguay, as HPE Growth, among others, is heavily invested in the payment sector. And Latin America, in particular, those two countries are very important for these markets. So that's sort of my Latin experience.
Okay, great. Can you share the story behind HPE? What inspired you to start it?
Oh, HPE Growth, maybe to set the scene, HPE Growth is a Series B stage tech growth investor. And what inspired me, it starts really with the underlying assets. I'm absolutely passionate about technology and always spending time with the technologies of tomorrow that emerge, say, on the digital side of things. So it's a lot around software, fintech, digital health. These days, clearly buzzwords also AI, climate tech, and these type of things. So that is also where it started. So I have a background as a mechanical engineer. So back then was already interested in technology. But as that was 35 years ago, I did miss to better study informatics. But very fast, I made my turf into stations. I worked a long time with General Atlantic Partners, who's one of the largest global growth tech investors, recognized my passion for combining really building companies in the sector and passion for technology. And then when looking at Europe, I felt that ticket sizes of 10 to 50 million euro per company simply is where you have the largest funnel of companies so that you can really run a pick and choose approach. And so what's driving me every day are great entrepreneurs, great founders out there who really have the ambition to build globally leading tech companies. And with that also at HPE, we have a DNA really of also doing something good with technology. So and that's sort of really what you would call purpose-driven investing. And that is what gets not only me, but the entire HPE team going.
Okay, really interesting. Your focus regarding portfolio and investment mainly in Europe?
Yes, our mandate is to invest in Western European headquartered companies or companies that have, at the time of operations, at the time of investment, their main operations in Europe. But it is the goal to build then globally successful businesses, ideally category leaders and global market leaders, which we have achieved with a couple of our investments. So therefore, we always come with a background and DNA of Europe, but always take a very global view in our investments.
Okay. Well, I mean, my first immediate question when we think about Europe, I'm talking from here, from Latin America or from America, is the Russia-Ukraine crisis, at least at the moment we are recording this podcast. What are your thoughts from an investment point of view?
Well, first of all, I think all of our thoughts are with the people in the Ukraine, but also with the families who lose on the Russian side lives. Nothing justifies to kill people. So therefore, it's simply horrible and terrifying what is happening there. I mean, geographically, this on the one hand side appears to be very close. but it is geographically still quite a distance to the Western European side. So economically, like with every crisis ongoing, there is clearly things that is a threat to certain industries and has impact on certain industries. But there's also always opportunity around it. And I'm not talking only about defense. There's a lot of on the human care side, where it's also technology is used to help and support. So there is also a lot of opportunity around there. I think generally we get this question very often, why Europe? Particularly when you also clearly talk to American investors or American peers. I think why Europe is very clear. Each region in the world has its own strengths, has its own topics where it really very sustainably grows know-how, expertise, etc. And each geography in the world has certain issues and problems which have to be addressed in the region first, where you can build big, large companies around it, but also export that technology then into the world. To give an example, Europe has many borders, yes, absolutely, what the US doesn't have. So Europe needs to resolve for cross-border payment transactions. Someone who's driving with his German car into the Netherlands, but as he studied maybe in Paris, still has a French credit card that wants to charge his electrical vehicle at a charging point in the Netherlands. So you need to bring across 3 different countries in a reconciliation of the transaction, etc., which is highly complex. And we have invested very successfully, for example, in companies that address issues which have to do with cross-border payment. Not as relevant in the US, but very relevant, for example, in the Latin and South American market or in Southeast Asia. So no wonder that some of our successful payment companies are active in those regions as well. Another topic, Europe has always been, I think, on the forefront of climate technology and very consistently developing that further. While, for example, in the US, it is way more volatile if climate technology impact, etc., is en vogue or not. Very often goes hand in hand with which political government currently is there. So in Europe, that is really DNA of the culture, and Europeans have way more on this side of things to fight for the greater good. So I would say, for example, in climate technology, Europe definitely has an edge over many regions in the world.
Okay. No, that's really interesting. Around here, many families are quite traditional. Wealth is really recent. Usually, you interact with second generation of wealth. The family office concept is relatively new compared to Europe or London, for example, Germany, Switzerland, where you have 5 generations, 6 generations of wealth and very consolidated family offices. So in here right now, people are very focused on wealth preservation. And regarding that, how would you position HPE Growth regarding, for example, risk management to incentivize a family from here to diversify their portfolio, considering first geography diversification with Europe, what you just described, but also with proper risk management that is very important for them?
Sure. Look, if you manage third parties' capital, it's a fiduciary duty always to start with the thought of wealth preservation. Clearly, then there are strategies out there which allow easier for that than others, and there's securities out there that allow easier for that than others. So to give an example, I was not only in my former career active at a private equity investor like General Atlantic, but I was also active in a credit hedge fund called Avenue Capital, which is also very sizable. The security of senior debt secured sometimes even by assets has a different risk profile than an equity investment. You cannot ignore that, but also therefore the risk reward profile is very different. However, if you are comfortable generally to move on the equity side of things, I think that particularly digital or software investments, and everything goes back to software and digital. Doesn't matter if it's fintech, digital health, climate tech, everything whatever you can translate back to software, is one of the most risk-averse equity asset classes you can invest in. Why is that? Software very often is what is called, has an high element of recurring revenues. So revenues that come back every year, which has to do with clearly with technology and customer stickiness. Once you integrate it with a solution, it's not that easy to walk away for a customer. And not only does it come with a high level of recurring revenues, but it also typically comes as very high gross margins. Very high gross margin means that you have very little production costs, you can say so, a very little cost of goods sold. So your net, your sort of your gross profit come in margin somewhere between 60 and 90%. So therefore, to create with software companies very recurring or high quality revenues and very profitable high quality revenues is, particularly in the later stage where we are active, is something that we have as a consistent pattern in our portfolio. And if you then go into these companies and give them even more money and more cash buffer, you also basically de-risk the companies, and with each day of further growth, it comes even a point where these customers, 90 cents of every revenue falls through to the profitability line. Because stay with the examples of cross-border payment. If a certain transaction platform does process per day 500,000 transactions or 1 million transactions, doesn't matter for the software platform, and only because you double your transactions, you have very limited kind of more like incremental cost. So revenue process at some stage falls through to the profitability line. So in terms of risk profile on the equity side, I would consider the growth stage of tech investing actually one with the lowest risk. If you compare that to buyout, for example, where you go into a healthy company first loaded with a lot of debt, you start with a very risky starting point where a company has little room for error, for failure, to maybe something go wrong with that. If you go back and go with a very experienced manager, you typically have also very good returns, but the starting point of the underlying asset is definitely less healthy than where we are. So from a wealth preservation point of view, if you're comfortable and say you want to diversify and create a little bit more alpha in the portfolio, so having the chance to create a 3 to 5x on my capital invested, I think it's in terms of the equity risk is definitely a low profile one, and therefore comes closest to what you can call on the equity side capital preservation. And also, as you have a team behind it like us who's working daily with those companies and really making sure that the companies, if they don't perform immediately, you turn them properly around. I think that has very high chances not to lose money. And that's also our track record. We never delivered vehicles below 1x our capital, actually not below 2x our capital. So therefore, the result proves the talking.
Okay. And what about regarding case stories or portfolio companies? Because I'm sure under your portfolio, you have amazing companies, very interesting technology. You already mentioned about cross-border payments. That is a very interesting topic to solve globally, honestly, because, well, in Europe, Latin America is an emerging market. It's quite difficult, but it has the same challenge. Any other example of a very interesting portfolio company you have?
No, sure, but I mean, let's stay there also with the payments. We're very interested in portfolio companies. Very often, while they're partially category leaders, means really absolute market leaders in their segment. Very often, these company names may not be known because they are B2B and work in the background. Means if you pay on the internet, you as a consumer, you don't know what is happening in the background and who's providing in the background the compliance checks, the real-time checking, is a credit card valid, yes or no. So these companies very often not known. But to give the example, what we spoke about is a company called P-Pro. It's absolutely globally the category leader in what is called processing of local payment methods, like a Pix in Brazil, for example, but also global payment methods processing like a PayPal, like a WeChat Pay, Tencent Pay, and therefore, no surprise, 40% of the revenue of P-Pro is coming from Latin America, because also there you have many borders, many local payment methods, many payment options, how you can pay on the internet. Another company which some people may know is a company called WeTransfer. WeTransfer is a file sharing technology with about 90 million users around the globe. WeTransfer was built to send across very large files. It's used very often in the creative industry. So people send big files of photos, films, videos, large files. And that is a company that we have grown, for example, to give indication of size, from a 17 million euro in revenues when we entered to about a 200 million euro in revenue with a 35 million euro in positive EBITDA, right? And this type of profile of companies we like and build. And as I said, due to about 90 million users, you have also very high revenue diversification. And I spoke about recurring revenues and high quality of revenues, where WeTransfer, for example, is a very good example, right?
Okay. Yes. Well, for example, WeTransfer is something that I use. Well, not only me, millions of people every day. So really cool example too.
Yeah, now it was a Dutch company. Now it's an Italian company, because we just sold it very successfully to Italian Bending Spoons, which is one of the fast-growing Italian software companies. So you see that also in these markets, because we often get those questions, also in Europe, you can build great technology businesses, and you even find buyers for that. And guess what? The buyer was not even coming out of the US. It's a European buyer. Also closing there the loop to your question, can you grow companies in Europe and how much they're affected? So I think generally on the digital side, geopolitical tensions currently impact a little bit less. I think who definitely is more impact are industrial companies that have supply chain, because the geopolitical tension, Ukraine, Russia, or call it the war, is also clearly impact relationships around the globe with China and other countries who are suppliers of many industrial companies in Europe. So I think the impact is here a bit higher. But again, very often when industrial or old economy companies are under pressure, they look for digital solutions to drive efficiency. And that is then therefore also a lot of opportunity for us as an investor in digital companies, be it on the climate side to still reduce the CO2 footprint, to bring costs down there, on the energy management side, on the carbon trading side, or is it that people kind of like want to get their payments more efficient, or the customer services by AI solutions. You've recently seen, for example, Klarna, which is a very large European payment company, has let go of about 1,000 people just by replacing call center people with software AI solutions. So crises often drive efficiency, and digital solutions in 75% of the cases a solution to driving efficiency.
Okay. No, that's a good point regarding crisis and the actual situation. Any final thought? I mean, this is a topic where we could talk probably the whole afternoon with multiple coffees and everything, but just to keep it short for the audience of that podcast, any additional thought?
Yeah, I think it's really something that is close to our heart. I don't know. Very often you hear these days the word impact. What does that mean? I would have put it this way. Impact is something where we say you can use really technology to address actual issues and problems, both in society and environment. And that is how we use our forces. And we are ourselves what is called the B Corp. The B Corp is a certification and recognizing leaders in ESG and sustainability. We have that since 3 years. So that is really something what is driving our DNA and culture. While we are also in the pre-marketing of a dedicated impact fund now that is focusing on the environmental and the climate side. So basically investing in digital solutions, contributing to fight climate change. And that is really something which is really a project which is coming fully carried by the energy of the entire team. Because while we have been already purpose-driven investing before, now bringing a dedicated fund that is really focusing on positive impact, that is something were asking initially about what inspires us. That inspires us within our own firm, that we are able now at a stage to bring products which really can help to address the most fundamental problems we can have on the planet, which is our environment and climate. Because if the planet stops working, we don't need cross-border payments anymore. We don't need file sharing anymore, what we spoke about before. So that is something that is close to our heart and what we want to be remembered for, that we use our responsibility, means we connect institutional capital and family office capital with society, that we use our forces for the good.
Amazing. Well, thank you, Tim. Hopefully we could meet again in the near future and have a face-to-face coffee in the next time.
Costa Rica is on my 2025 list. Looking forward.
Amazing. See you. Bye.
See you. Bye.